Hello guys, welcome back to another week, and it's very close to close up the month. Only 2 weeks left and things are getting, hectic. This week's going to be really packed. We're going to be having the Fed, the FOMC, we're going to be having BOE as well, and of course the European CPI. So stay tuned, because today it's going to be really important for you to understand what can possibly happen on euro dollar, let's say US dollar CAD, and what's going on with tariffs as well, because Trump again are having some problems, implementing some tariffs into aluminium and steel, and Brazil as an emerging market, and Canada as one of the first country we'll be having problems with that again. So stay tuned with me. But first, before we go any further, I need your contribution. I need some sort of, show some passion to us, because we're here every single day posting good content to you. So thumbs up, subscribe to the channel, and send this content to your friends. And don't forget that I do have a Telegram channel where I'm posting daily analysis, I'm posting daily content, and it's free. So you just go into the description of the video, click into join the link, the Telegram link, and you will be fine. As well, we do have 3 webinars per week, Monday, Tuesday, and Wednesday, 5 to 6 p.m. on Australia time. Okay, let's go. Now, I was looking at the economic calendar this morning, and it's packed. I can tell you that, because a lot of volatility, expect a lot of volatility, and probably not Monday and Tuesday. After that, we're most likely gonna have some volatility, and that's gonna be from FOMC as well as BOE and the Euro CPI. Okay, well let's break it down from the most important to the less important. All of the 3 are very important, but just so we know what to go for. First, we're going to have on the 19th of March, so in 2 days, we're going to be having the FOMC. FOMC is expected 99%, so only 1% is believing on a cut. 1% is believing on a cut, 99% is believing on a pause. You can see on this image here from CME FedWatch Tool. It's a public tool, you can easily access that. Just type CME Fed, F-E-D, Watch, W-A-T-H, Tool, T-O-O-L, okay? Easy to access, really, really easy to access, and it's public. Basically measures the market sentiment on what is they expecting to happen on the Fed. And we can see that 99% of the market is expecting a pause, another pause, okay? And you can check the other dates as well on the top. You can see the 19th of March, you can see June, July, October, December, you can see a bunch of dates. That is, of course, the dates of the meeting, and that's where it's the most important thing, because every meeting that changes. Maybe next month, or next meeting, sorry, we have a 50% probability of a cut and 50% probability of a pause, so 50-50. And then after the release of the minutes of the rate statement gets out, that changes completely, because they say something on those lines that change it there. Okay, so that's very important to check. And then maybe 60% now believes on a pause and 40% believes on a cut. So that changes from one word or 1-2 words different from one to another. Okay, now stepping back, what do I believe that can possibly happen from FOMC? I guess from the labor market and from the CPI, from the inflation we're having, and from the price index that we're having on USA, and from Trump, and all of the other, things that are happening on the market, stock market are plumbing and everything else, most likely we're going to have a pause, of course, but what is going to be most important will be what Jerome Powell will say on the speech afterwards. And I think that he will be some sort of neutral to trying to maintain a posture of hawkish, but that's going to be really important on the questions. What the journalists will ask the questions will be really important to us. So if a journalist asks a question like, what do you think about the next rate cut? When is that going to happen? Do you see another 2 cuts this year? Definitely pay attention on those. But that's a public event, okay? You can just type it up on the day, of course, FOMC Live, or you can type on the Google as well, FOMC Live Fed website, or you can go to YouTube and type it up, FOMC Live, on the day, of course, on the 19th of March, on the time zone, correct time zone, and that will be live. So I guess that will bring some sort of volatility for the US dollar. The US dollar is somewhat consolidated, as they always do 1 week prior to the meeting. It sort of consolidates in a level. I guess we may see more depreciation coming from the US dollar after that meeting, or in the euro dollar it is as well sort of consolidated. But is it time to short euro dollar? That's what I want to talk about on tomorrow's webinar. So because we are having euro dollar around 1.10, and I guess that's the end of the trend. And I guess we are ready to starting to see some correction downwards on the euro dollar. Now, next topic, we have BOE. BOE is really important. They are predicted to do a 25 to 50 basis points cut. And if they do cut, it's widely expected. I think the most important thing again will be the rate statement. And I'm not too sure if they would be looking to maintain a hawkish approach, because they are very dovish already. But the pound has been strengthening in the back of the US dollar, but not in the back of the Japanese yen. Okay, so what I want to say is it's not because they are being somewhat dovish or hawkish at this moment of the market that the pound will be, plumbing. No, it's somewhat of getting constructive announcements and constructive sort of, I would say, momentum to keep going up, but I think is the end of the trend for the pound as well. And last but not least, we have the European CPI. Will be expected to be a little bit below what was the previous one. I do believe in that, but if the tariffs get implemented next month or whatever, then we have to be careful, because at the moment we're having a very low inflation and a very low rate, and the ECB will continue to cut because they can, because the inflation is low. But if Ukraine and Russia sort of end the war, as well, German makes partnership back to Russia and German gets the gas from Russia much cheaper, the inflation will decline a lot, because the gas prices have been dropping. And that's a big contributor, a big factor for the inflation to be dropping. And ECB knows that. But when we take off and put on the core CPI, it's been very steady. So looking very carefully on that. If the inflation comes up lower, then it just strengthens up my thesis of shorting euro dollar. So guys, I hope everyone have a beautiful week ahead, because that's a lot of things going on. If you have any questions, if you're not too sure on what's happening on the CPI or how to trade the CPI, I've made a blog telling my secret strategy, let's say, on how do I trade the CPI releases. And you can find that into the education section on the ACY website. So go to ACY website, go into learn, and then education, and then you click on my name, and then you can find there the CPI guide on how to trade the CPI release, because people sort of misunderstood how to trade the CPI. And I tell you that, how do you actually trade? Because you don't trade the release, you trade the aftermath. So that's exactly what you're going to learn on that article. But thank you so much for being with me. I hope everyone have a beautiful week. And don't forget, Tuesday, Wednesday, and Thursday, we do have the webinars free, 5 to 6 p.m. Thank you so much, guys. If you have any questions, put down in the comment. I will make sure to have some time and answer those. Otherwise, I'll see you in the next video, or I see you tomorrow on the webinar. Thanks. Bye.